One of the ways to lose money in the stock market is to try to short Tesla stock. According to the history tells us that way because we've seen this in the past, but that didn't prevent YieldMax ETF from actually doing just that. In this video, today's quick update on the brand new ETF from YieldMax, and spoiler alert, this ETF is actually doing shorting stock, which is Tesla. So we're going to look at this ETF here. It's called Title Trust. Okay, YieldMax shorts Tesla, or the ticker symbol is CRSH. I'll call it crash. 1978 the price of today, and of course after hours it went all the way to 5%. And that movement is because, of course, is a shorting, is option or inverse ETF, of course, does, because we can see after hours the Tesla stock went down a little bit. So that kicked it a little bit better. We don't know if it's going to stay that way for tomorrow opening markets, right? Because Tesla also is volatile stock. So we can see the 52-week range has been it's been between 1963 to 2206. So that's since it was inception. We can see the volume is very low, so it doesn't have as much liquidity so far. But what this ETF is, before you invest your money, you need to know exactly what it is. And of course, in this video today, I'm going to show you that. First, let's go to YieldMax website. We can see here. This is the official website because this is the ticker symbol I just showed you, and then of course distribution, there's nothing there. We look at the here, but again, this distribution here, if you are someone who of course subscribe to this channel, and you of course you get notification, I will update you whenever the distribution comes out. So just make sure you keep that in mind, so you don't want to miss that. And of course, any other ETF, I always give you updates. If we look at the investment overview, of investment objective and fund information, I'm going to give you all of this in shortly here. But let's look at the fund information here. We can see the ticker symbol. The full name is YieldMax Short Tesla Option Income Strategy ETF, which is CRSH crash. A fund inception date was May 1st, 2024. It trades on New York Stock Exchange. We can see the expense ratio is 0.99. As you may know, most YieldMax ETFs, of course, they are 0.99. And so far right now, it has about 2.5 million. It's not that much. We look at the holdings now. Of course, it does hold Tesla. Not holding, actually, it doesn't hold because it's synthetic, right? But they do have treasury. They hold treasury as collateral. We can see here is budget, 40%. So majority of money is invested in treasury, which are bonds, government bonds. There's a put option here, 175, expires on May 10th. And also there's a call option here, 265, expires on July 19, 2024. And then there's another put option of 180, which expires on July 19th, 2024. So on the same date, there's a put option which expires on the same date as a put. So it's here they're trying to play both sides, which to also way to kind of hurt yourself, right? So if you lose here, you gain money here. That's a play here. Overview of this fund or this ETF, of course. This ETF is an active managed ETF that seeks to generate current income from synthetic covered put strategy on a Tesla stock, while providing indirect short exposure to share price of Tesla. Okay, the CRSH potential gain from it decreases in the share price of Tesla is limited, while its potential for losses resulting from increases in the share price of Tesla is up to 100%. Because remember, this is short. So if Tesla stock goes down, this ETF will make money, but up to there's a limit to that. But of course, if Tesla price goes up, the loss is up to 100% of your ETF. That's not fair, but that's how they design this ETF. So that's what I'm saying. You have to be really careful to invest in this ETF. Now let's go to construction of this ETF. Of course, it does have 4 elements. The first one will be synthetic short exposure to Tesla, consisting of long at the money put option and short at the money call option. Okay, which allows CRSH to participate on an inverse basis in changes. Okay, that will be up or down to the share price of Tesla. Okay, the second one will be covered put writing, where Tesla put options are sold against the synthetic short portion of this strategy, which allow this ETF to generate income. And the third one will be they use a treasury, of course, as a collateral. At the same time, those treasury will generate income. Of course, the bond right now, we know there are bonds right now pay a higher yield, so they're gonna make a lot of money from that. You know, if you have 2.5 million, that's a lot of money you can generate from interest. Out of the money, call option, which are purchased to seek to cap CRSH potential losses from its short exposure to Tesla if Tesla share price appreciates significantly in value. So those are the 4 strategies they use to construct this ETF. Okay, there's a big bold letter here. You need to pay attention to this. The loss capping work only if Tesla share prices rises to or above the strike price of the purchase out of the money call option. If the Tesla share prices increases but stays below the strike price of the option CRSH, this ETF will incur losses proportionate to the price increase, which may be up to 100% of your investment. So you gotta be careful. My suggestion is, like, if you want to invest in this ETF, you really have to go to the website YieldMax.com and then look at the prospectus exactly to know, because it's so complex. It's not as simple as other ETFs. Why invest in this ETF to begin with? So there are two main reasons you can invest in this ETF. First, of course, you're looking to generate income, which is not depending on the depreciation the Tesla price, because of course it does not invest it directly. The second reason will be to seek to benefit when Tesla share price decreases in value, because of course it does show Tesla stock. So those are the 2 main reasons you're going to. So instead of you shorting Tesla stock directly, you can use this one to do that. But this one, of course, is synthetic, so there's more complex to that. But if you want to know more, I can actually give you another. It's a great ETF, actually does this type of strategy, but I think it's better than this one. And of course, this is the newest member of the YieldMax ETFs, which right now they have a bunch of them, and these are all of the ETFs they have. Right now I think there are almost 22 of them, including YMAG and YMAX and Ulti. These are one-on-one all-in-one ETFs. So for me, I would say if you want to invest in that ETF, technically I would rather just go with YMAG, YMAX, or Ulti, or even Tesla itself, right? So if you want to know, just leave a comment below. I can actually give you a ticker symbol for another ETF that does the same kind of strategy, but it does hold directly. So which will be better than with this one, I would say. So that's all. I just want to give you an update on the brand new ETF from YieldMax, which is this one. So what do you think? Are you going to invest in this ETF, or are you going to hold and see the performance of it? So that's all for today, guys. I'll catch you on next one. Bye bye.